What's up, everyone? I'm Teresa from Brass Taxes. We've also got Anna here. We're both advisors, tax advisors there. Um, I, yeah, I've been an advisor for about 4 years, and it was a freelancer beforehand, and for about 10 years before I realized I could be doing my taxes better. Um, the goal of this talk is to give freelancers info that we all should have been taught a long time ago. Um, Most people don't know most of this stuff. So, it's really common for people to feel like, quote unquote, dumb for not knowing, but also no one talks about it. So we all just think everyone else knows more than we do. But generally, most people just don't know a lot about it. So we're here to just like come together as freelancers. I mean, generally freelancers are working in isolation a lot of the times, especially when it comes to like admin stuff. So to just be able to come together as a common group that um, experiences similar stuff and feel normal about not understanding it. Um, the goal here is to like let you know what you need to understand and then what you don't need to worry about. We want to like worry the right amount, but there's so much to know about taxes that we end up just worrying about everything because we don't know everything. So we're here just to kind of like outline what can be, you don't have to think about that versus these are some good things to know. And like Glenn said, we have a PDF packet that is like freelance 101. This is what you got to know. So that'll help too. Yeah, so everyone at Brass Taxes, like I said, is or was a freelancer, got wind that they could have been doing their taxes better, and then wanted to spread that information and help other people. I've been a video editor since, well, for 10 years. um, and freelancing. And despite not knowing like anything about taxes, didn't ever think that I needed to get help with it. Because, like I said, it's just assumed that we should know this stuff. So it seems like, okay, I'll just get to that point in the year, deal with all the headache of it then, not ask questions, do what I need to do, get it done. But not knowing that actually, when I kind of dig in a little deeper, I will make my outcome better to like complicate it more, to understand the complications of it more, will help me understand how I can save money. By just kind of going on autopilot, putting blinders on, that's when I was losing money. Um, but it starts with some basic things. So, for example, when I went to go get help, eventually it was from my brother in law. He was the only person in my family who made freelance income. Everyone else has been a W 2 employee. They were like, that sounds complicated. I can't give you any help. But my one brother in law did. And the first question he asked is like, yeah, Teresa, so like, what kind of employee are you at this job? And I didn't even know what kind of question he was asking me. What he was asking is like, are you a W 2 employee? Are you 1099 employee? Because even the word employee can like get used all over the place. Contractor, freelancer, gig worker, all these things mean the same thing. And we'll use that interchangeably in this talk. But you're still even like, as a person working for yourself, you're an employee of yourself, more or less. So the question confused me, and I was like, "What kind of employee am I? A good one?" And that wasn't the answer. But I didn't even know what the answers were or could be. I didn't know what the options were. So, in doing these tax talks, we're like most finding that most of the questions that walk through the door are from people who never got any kind of education about this stuff, but suddenly we're like making untaxed money and poof, we're in business and we have to know all these things. Um, and so we do this education work to kind of minimize the unnecessary stress. Yeah, and then mood softening by cats. So you'll see cats throughout. So like I'm just gonna continue to hammer this, but there really are no dumb questions when it comes to this stuff. We'll have some time, I'm sure, at the end to do a little bit of Q&A. Anna will probably help me with that. But if there's anything that just like is like blaringly confusing or you need to slow down or anything, just holler. Okay. So one of the first things to know about this stuff is that once you start making untaxed money, you've essentially created a parallel version of yourself in the eyes of the IRS. So there's the you as a person in your Supreme hoodie, sweatshirt as a standard W-2 employee who has taxes automatically withheld from your paychecks. And then there's the you as a business in your red star bow tie who's earning untaxed money throughout the year and needs to settle up on their taxes at the end of the year. And there's different rules on each side of this, and we'll get into the nuances of it later. But the first thing to recognize is that there is a separation. There is an initial separation that has rules on this side and rules on this side. And eventually, when they come back together, that's when you kind of get your results. But it's important to know that some things pertain to one side of you, and the other things are one version of you, and the other rules pertain to the other version of you. So one question that we get a lot is like, can I take business expenses if I'm taking the standard deduction? And that question isn't really a question, it's a misunderstanding of this separation. So as you can see, you as a person, you know, the IRS assumes you're a W-2 employee, you have retirement accounts, although you can have retirement accounts on the other side too. You can deduct student loan interest. These are just a couple of examples of like the you as a person side. And every single taxpayer gets to take the standard deduction. And the standard deduction is a set amount of money that changes from year to year based on inflation that you get to deduct from your income no matter what. So for 2023, that amount is $13,850. So no matter what, every person single person gets to take that amount out of their income. If you're married, it's just double that amount. But that has nothing to do with you as a business side. If you're making untaxed money, you have a business, you are allowed to take business expenses against that. And that's kind of like that last part, taking business expenses. That's the kind of key part to understanding how to make your taxes turn out better. And it was the thing that I really messed up on my taxes for a long time. So as soon as you make untaxed money, poof, you're in business. You don't need an LLC or a formal like S Corp or structure to be a legitimate business. And like any business, from Amazon to the neighborhood babysitter, it usually takes spending money to make money, right? It's pretty normal that you have to buy things in order to create a thing and sell it or perform it, or have people buy tickets to what you're doing. But it takes spending stuff in order to bring it in. And this is the part that I really misunderstood about my own business starting out. Like I said, I really didn't know I needed to get help, but eventually it started to seem like, okay, maybe this stuff is more complicated than I understood. I would need help. I asked another film editor, and she kind of was like, I don't really know anyone who really knows our business, but this is a person that we've used. You can use them too. And I went to go see this person. I dropped off my stuff. I had about $20,000 in income. And when she asked me to like document my expenses, I was like, oh gosh, what did I buy? Maybe like a keyboard and some cords for my hard drive. It was like $50 is what I could like see in my room that I bought that year. But like, what business in the world earns $20,000 and spends only 50? It just doesn't happen. But I wasn't thinking about like all of these other intangible expenses. So paying for Creative Cloud, or all like cloud storage space that I pay for on a daily and keep like my work documents in. Once you like start realizing that you're a business, you're wanting to put like your business expense glasses on, see what you're actually spending money on. And you might realize, like, oh, this thing that like is totally normal for me as a person to be spending money on now can be seen as a business expense. So for example, um, the like money that I was spending for going to the movies, that's now a research expense because I'm a filmmaker and I need to take in content to know how to sell content. Um, so this is another reason why it's so important to work with someone who knows your industry, because the part of understanding what's acceptable as a business expense is something that's like, if someone doesn't know your industry, they wouldn't know that that's part of an ordinary expense for you. There was also like an understanding that you have to have money in order, or have an income in order to count business expenses. There's lots of different ways to prove to the IRS that you are indeed in business, and it's not just income. Actually, in a really heartening way, it was great to learn that the IRS thinks you're in business when you're trying to make a profit. You don't even have to make a profit to be considered in business. They actually care about the intention behind things. So, you know, even if for the years that I wasn't making a lot of money video editing or trying to become a director, you know, I was spending a lot of money taking script writing classes, submitting things to festivals, all of these fees, where I didn't feel like in my heart and soul that I was like a capital F filmmaker yet. I was still trying to be. And in that way, I was able to take all of these expenses, even if I didn't have a lot of income. Um, so the crux of this is like acknowledging that I am a business is kind of the first step. So as long as you're trying to make a profit, you're in business. And I'm not saying that like if you're sitting at home all day watching TV, then like you're a TV writer. You're not taking expenses for a business that you're not doing. But I am saying that like you're not a writer just because you sell a book. You're a writer when you start interning at a place or doing a bunch of free articles, or joining a writer's collective. Anything that is like starting to get your gears in motion for becoming a business and receiving income makes you a business. And so then tracking those business expenses is going to be vital. And a lot of times in the beginning of businesses, like lots of businesses will have a loss. They'll have more expenses than income. It's really common. And we should take advantage of the time that we do have losses, because they can positively affect the rest of our return. And we'll talk about that a little bit. Okay, I'm gonna take a water break and see if there's any questions. I feel like I saw something pop up.
It may have been me letting in people.
Oh, great. Thank you, Anna. Yeah, Sandra, I think, said something about hard drives, gear updates, marketing. Yeah, we'll go over some like different examples of business expenses. And like I said, what will be ordinary and necessary for a filmmaker might be different for an actor. But there could be some overlap too. So we'll talk about that a little bit. Okay, so this is one of the most important things to remember. You're not taxed on your gross income. You're taxed on your profit, which is your income after your expenses. So Science Cat here got paid $1 million to sell his rockets to NASA, but it took $999,000 to make it. So he's only taxed on $1,000 for being a perceived millionaire science cat. So that's why it's really important to track your expenses, right? Because it's directly linked to how much you will pay in taxes. If you remember nothing else from this presentation, remember to track your expenses. So here's the general list of what you might be able to claim as a business expense. The rule at the very bottom right there is ordinary and necessary. That's what the IRS's explicit but also incredibly vague rule is, right? So classes that classes you take for like professional development, those things might be gray areas if like it just depends on what it's for. Um, but like equipment, office supplies, software, internet, phone, research, and education, those things generally will count. But when it gets into like, oh, I took a training for, you know, like how to be a business person, I would say that would count. But there are just different areas where, as you can see, it can get a little bit like, I'm not sure if the IRS would count this. So, for example, one area that we actually get with a lot of actors and performers is clothing. So we know that the IRS won't allow any clothing that is used for both business and streetwear. So it's got to be like something that's specifically a costume um, that you don't wear on the street. But these are the kinds of questions that would be helpful to ask someone kind of in the moment rather than just like batching it all in there and hoping for the best. Because in the unlikely case of an audit, you just need to prove how you got all those numbers. And then if they saw that part of it was like streetwear clothes, yeah, you'll just have to pay tax on like what you would have paid then if you didn't count that expense. So yeah, so it's just good to check in with someone. Whatever system you use for tracking these expenses and it works is the best system to use. People ask us a lot of times, like, should I use QuickBooks? What's the like perfect way to track all these things? And the answer is whatever works for you and will make you do it. Like one test is if you pay $3 for a cup of coffee out networking with someone and you're like, yeah, it's $3, like whatever, I'm not going to count it. I don't care. It means that your system's probably too complicated. It can be as simple as taking that receipt and putting it in a shoebox, and at the end of the month or quarter, going through and allocating and seeing on your spreadsheet what you had spent. But the truth remains is that $3 on that coffee is $3 off of your profit. So it is a dollar for dollar thing. Capturing all of your expenses is how your profit's going to get lower. It's less important to get the business category right. From a math perspective, it doesn't really matter where things go. It's more important to just get it in there, and then we can talk through, or whoever you're working with can talk through where certain things would go. Often it's like, okay, if I have to go back to this return in 3 years, where will I remember that I stashed away Creative Cloud stuff, or that I stashed away like script writing software or something like that? Like, how will I remember that the fees category is 800 because, oh, I put all of this stuff in here? So it's more for you, but we definitely have some recommendations to make that easier. So this is just like a little review about like how our income tax system works in general. We have a progressive system, which means the more you earn, the more you pay. But there is this kind of misconception that when you start earning more money, you're automatically going to be taxed that full amount at this higher rate. And that's not how it works. You have to fill the buckets from left to right, and only the amount that overflows into the next bucket is taxed at that higher rate. So taking a look at this slide, 0% is just the standard deduction. So I was saying that earlier, everyone gets to deduct $13,850 in 2023 from their taxes, from their taxable income. So that first amount will be taxed at 0% because it's nothing. Starting at after the standard deduction, from $1 up to $11,000, you're taxed at 10%. The only amount that would get taxed at 12% is if you made $11,001, then that $1 would be taxed at 12%, but the first 11,000 would still be taxed at 10%, and so on and so forth. So the brackets go higher than this, but this is, good start to understanding it. And we say this just because lots of people are like, I don't want to make more money because I'm going to be taxed at a higher percentage. And it's like, no, only a portion of it will. So definitely always take the raise. Okay, so that was just income tax. When you're self employed, you're also paying self employment tax, which is a flat 15% on your self employment profit. And that's how self employed folks pay into Social Security and Medicare. On a W-2, which I think is a lot of what actors receive these days, they'll have federal taxes withheld, state taxes withheld, and then also Social Security and Medicare. Because self-employed folks are settling up for their taxes at the end of the year, they also need to pay income tax and then the self-employment tax. Okay, so back to you as a person, you as a business. You are paying the same in taxes, just in a different way. But this is where you can kind of see, and we'll go through in the next couple of slides too, is where if you have a loss on the business side, it will benefit you on the you as a person side, especially if you have W-2 income. When I was first working as a tax preparer, understanding self-employment tax was like one of those things where I was like, oh, 15% on your profit, that's actually kind of big. And that's the portion where people are like shocked to see how much they owe. It can kind of come as a shock. You might think that you're only paying income tax all year. You're like, okay, I'm in the clear. I'm just in 12%. And then you get hit with a bill and you're like, where did this come from? So when I first was working with someone, this person had a profit of $30,000 and they were in New York City. And like 30,000 in New York City is not like you're rolling in it. So having like 8,000, he had an $8,000 bill. Having 8,000 ready to pay was like steep. So he was really shocked to learn that, they could effectively make so little but owe so much. And that shock is understanding because if you write in Google, like, how much will I owe in taxes if I made $30,000? And Google will most likely tell you what you would owe if you're a W-2 employee, which would be about $3,600 in federal taxes. But if you're self-employed, you also owe self-employment tax. So it's not 3,600, it's more like 8,000. Google will give you the answer that most people want to know because most people are W-2 employees. So, another vote to like talking to someone about this. But let's look at how, these two sides coming together can benefit you. Okay, so let's say I'm a barista on a W-2, so that's a you as a person side. And then on the business side, I'm also making like little bow ties for cats. That's my business. And I made $5,000 making these bow ties, but it took $8,000 to get the expenses, or $8,000 in expenses to make these bow ties, right? So I have a loss of $3,000. So when these two sides come back together, like after I go through all the expenses, I realize I didn't have a profit. I had a loss of 3,000. These things come back together. What does that mean? Well, it means that now I'm not being charged income tax on that full 30,000 for my W-2. Now I'm only being charged on 27,000 because the profit or loss for my business will add or subtract from the total income that I have and being charged income tax on. It'll either add or subtract from it. And so you don't have to pay self-employment tax when you have a loss, right? You're not paying anything on income tax if you have a loss or self-employment tax. And what it's doing is lowering your overall income. So that's where this can get beneficial, because a W-2 has been withholding taxes in a ratio to 30,000, but now on your income tax return, you're saying that you only made 27,000. That means your refunds will increase. Okay, we're getting towards the end here. Just going to talk about like, how do we know how much we owe and how do I save it? Our money varies a lot year to year, especially as freelancers. But generally speaking, you'll owe about 30% of your freelance profit in federal taxes. There's also state taxes, city taxes, depending on where you're living. But this will be about what you'll pay in federal taxes. So how do you save it? You know, there's a couple of different ways to do it. One, like quick and dirty way, is just to take that percentage, like 30% from each check that you get, and put it aside. That is a fine way to do it. It's how I did it for a long time. But know that like you're putting like more than you need to aside, because you're taking that percentage on a gross meaning like untaxed check, whereas you're only ever going to be taxed on your profit. So a more accurate way is to have a rough estimate of what your profit is for a given month or quarter, and then you can take 30% of that and put it aside. So it just depends on how accurate you want to get. If you oversave, obviously, that's great. You just have a little bit of extra. The problem that I had with it is taking that percentage on a gross. I would have like a savings account that I wanted to like separate from, having it sit in a separate account is better than like just knowing in my mind that I'm not going to be able to hold on to this money. But I would see that amount and I'd be like, actually I need some money this week. So I'm going to take it out of this little savings account. Not a good idea. A way to like let go of that money is to pay estimates. So you're saving that amount all year or all quarter, and a way to kind of get it out of my little sticky fingers is to send it along to the government as you go. So you might have heard of paying quarterly estimates. The IRS inaccurately assumes that all freelancers are going to earn all of their money evenly throughout the year, just like a W-2 employee, which is not how it happens. But that means that they want their cut throughout the year. So they want you to pay your portion of what you might owe in that quarter at each quarter deadline. So April 15th, June 15th, September 15th, and then January 15th of the following year. Like I said, it can be good from like emotionally detaching and actually physically detaching from that money. But like it's also, if you're not making that much, it's kind of better to have a cash flow on hand too. So just use your judgment. Like there is something called an estimated tax penalty, where it's like, I think 0.5% of what you owe is being penalized for not having paid throughout the year. But if like suddenly you've already paid your estimate, but now you need $2,000 for new brakes in your car, I mean, it might have been good to have that cash on hand for that. So it just depends on what your situation is like. But it's all a process. So you kind of figure out where you lie in one year, and you might change to another year and go ahead and pay those estimates. But yeah, just kind of depends. All right. So key takeaways, CATS, internet gold. There is that separation of you as a person versus you as a business, rules on each side, and then they come together at the end, and that will dictate how much you will pay in taxes. The best way to have a handle on, some control of lowering your profit is to capture as many of your business expenses, all of your business expenses throughout the year. So you can count that against your income. And even if you don't have very much income, that loss will help if you have W-2 income. That business loss will help lower that taxable income. And just remember that as a freelancer, you're taxed both on income tax and then self-employment tax, that flat 15% on your profit. Yeah, I mean, we don't really ever think taxes are going to be the most fun thing to do, but we also think they can be a lot better than they currently are. The best thing that you can do for yourself in getting help with taxes is to speak with someone who's familiar with your industry. That could be us, that could be someone else. We don't expect that will be the best for everyone. But the best part about being able to talk to someone is asking as many questions as you can, and over. So, like, if someone's getting annoyed that you're asking the same question and not understanding something, they maybe aren't the best person to work with. I kind of define being comfortable with someone as being able to ask the same question over and over again. And them being like, yeah, let's find a different way to explain it. Yeah. And then when you should get help, anytime you're making untaxed income and you're curious or wanting to know more about what would count as a business expense, just getting some of that information, even just a couple of times, and then you can kind of categorize yourself. It's worth it. And then of course, like big life changes. Let's say you go to the country to go work. How does that affect your taxes? And you're getting married, you're having a kid, like all these things, big life changes can be really good to check in with someone. Yeah. And if you do decide you want to come work with us, everyone at this talk will get $50 off of their tax appointment by using that code. And I think that's all I have for slides. I can go ahead and open it up for questions. Anna, did I miss anything? Is there anything you want?
No, I was chatting with Arnold in my chats, and he just wanted to know more about tracking systems for expenses or just examples. I mean, I can speak on it a little bit.
Yeah.
I am also an actor and I am a tax advisor. What I do is put all of my acting expenses on one or two credit cards. So that's my business card. And then at the end of the year, I don't have to sift through all my personal expenses and my business expenses to find when I got headshots or when I paid for, a subscription service. So that's one thing you could do. But what, like Teresa was saying, whatever works for you, this is a very personal thing because if it's annoying, you'll probably stop doing it. So whatever works for you.
Yeah, I mean, one also really lazy way that I've done it is like if I get most of my receipts aren't like hard copy receipts anymore. A lot of them are emailed to me. And so I use Gmail and they have labels. So I'll like slap a 2023 business expense label on something, file it away, and suddenly I have a folder full of receipts that I can go through. And then there are other, like, QuickBooks tends to be a service that has like a bunch of bells and whistles that you can use if you have a super complicated situation, or just you have a business tax return, which is like a separate thing from what we're talking about right now. But it's not necessary for freelancers who are just going to use it for capturing business expenses. It's, I think, too expensive for that, although that is a business expense. There are free ones, like I think one I've heard is called Wave, and that's like a free one that you can enter in your card, like Anna was saying, and be able to capture it that way. Any other questions?
It looks like Tristan has their hand up.
I was gonna say, if you don't mind, if I jump in real quick, could we maybe stop the screen share? I can stop it from my screen.
Yeah.
And that way, yeah, cool. I'm gonna stop the screen share.
Okay.
Uh, I want to say I have my screen in speaker view. I think I will just go ahead and I'm gonna pin Anna and Teresa. So for these purposes, that should just make it on the recording. It'll have you guys front and center. It should.
Great.
Um, yeah, and then any actors with questions, feel free to raise your virtual hand. You can also raise your hand. For me, it puts you guys in like a scroll bar on the top, so I might not see every question. So
Yeah,
raising your
Tristan.
virtual hand under the reactions. Yes, Tristan has a question. We'll go to Tristan next. Also feel free to message me in the chat if you have a question and you feel like you haven't been able to raise your hand. You can't figure out how to raise your hand on Zoom. That's fine. Let me know you have a question. We'll make sure you get in there. But we'll go to Tristan, sorry, first, and then I see Arnold has a hand up, so we'll go to Arnold after Tristan. And I'm gonna leave it to you, ladies. I'll keep an eye out for questions and filter them over to you.
Cool. Thanks very much for this. It was very helpful. So basically, what it comes down to is, in addition to acting, I'm also a stand-up comic, and I toured my solo show down in New Zealand this past year. And I was there for 6 months, and I reckon I can claim the whole trip on as a business expense because that's the main reason I was down there. Do you have any recommendations on approaching the IRS about that? And also, do I need to pay tax in the US as well as in the foreign country? Do you know that?
Yeah. So when you're a US citizen, it's considered you have to file no matter if you've earned money in a different country or just in the US, you're always filing. It's possible that if you're out of the country for a minimum of 330 days, which is like all but like a month basically,
Hmm.
then you can exclude your income from being taxed. But you have to have pretty good logs of like where your whereabouts were,
Hmm.
and that would go on your return. That's just kind of like a contextualizing answer. Um, if you're going to a different country to do a project, do research, something like that, yeah, generally like anything that's very specific for business can be counted. So you're capturing your travel expenses, you're capturing anything you paid for during the trip that wasn't like personal. And then there are other things that you could use. For example, the IRS has a per diem rate for meals.
Hmm.
So if you were in New Zealand, there is a rate for this is what it would have cost someone who was in New Zealand doing business to feed themselves while they were working. Um, it's a set rate, so you do have to look up what the rate is for your specific location. But that's also another way to like not have to. I would still count all of your receipts because you want to like take the better. You would either take your real receipts or the per diem rate. The per diem rate is usually the better thing, but just to like get into a good habit of calculating it all anyway. Your question was, do I need to file in both?
Hmm.
It sort of depends on what happened in New Zealand. If you were getting paid by people there and they want you to file there, then you would. If you did you earn income or was it just like a business trip to do?
I had income. Yeah, I was doing a couple festivals there as
Oh,
well.
okay.
Yeah.
Okay, so you're paid by New Zealand
Um.
entities.
Yeah, by the entity. Yeah, the various festivals there. Yeah.
Okay. So it doesn't it's like if they want you to file one, then you would file one and then that would be reconciled on your US tax return. So if you
Mm-hmm.
pay taxes in New Zealand, specifically also if you paid into their social security programs, then you could count that as a credit on the US side.
Okay.
Um, you would just want to go do that return first. It would just be easier. Sometimes it doesn't work out that way, and you might need to like file your U.S. tax return on time or get an extension and then reconcile it at the end. But yeah, they would talk to each other. But it depends on if New Zealand needs you to. If you didn't need to, you'd still need to report that income on your U.S. return.
Okay. And I assume when I'm putting together the year's return, I would convert the from New Zealand to American dollars, the total income, right?
Yeah, and there's a like IRS calculator for getting the conversion to what they would approve. Yeah.
Sweet. Okay. Thank you.
Yeah.
Just really quickly, I'm gonna drop that PDF file in the chat now in
Great.
case anybody needs to leave early. Um, that is actually, sorry, that might take me a second. I almost just put the wrong file in there, which is like the attendance sheet from today's. Here we go. That's the right one. All right, so that should be in the chat now for everyone to go and download. It's probably just going to take a second to load into there. Um, um, I had a quick tag on with the meal allowance, like slash per diem. Does that vary from state to state, or is that like a federal set? Because like I'm in Connecticut, for example, and like I feel like it's different in Connecticut than it is in maybe some, like whatever. It'll just be varied from state to state. And then also like, can you claim that? Like my chosen line of survival work is like as an Uber driver, right? So some days I might go out and do 10 hours on the road, and some days I might do 3 because that's all I have time for because I had auditions or something, right? Does it need to be on an 8-hour like work day that you can claim meal allowance, or is it like I worked 340 days this year, so I have 340 days that I can claim per diem meal allowance? Like, is there gray area to it? Just since we were on that topic, I wanted
Yeah.
to clarify some of that real quick if anybody else had the same question. I'll also probably I have like a billion questions in every event, so I'll probably
Okay.
ask some too. I'm going to defer to the attendees here. So Arnold, after we clarify this stuff, you're up next. If anybody has questions, put your hands up. I'll let you guys go first, but like I will probably ask some other questions as well. But yeah,
Cool.
I'd love to get some clarity on some of that meal allowance stuff. Like, is there an hours requirement? Does it vary from
Yeah.
state?
So it does vary from state to state. Each state has a different like it's more expensive to buy lunch in New York than it is in Kansas City. So each one, the IRS, it's a federal standard rate that they choose for each city. So yeah, that's the first question. The second question, you are using per diem rates if you go to a different state and do that work, or a different country. You're not using per diem rates if it's just you networking around town in your own city. And generally for meals, it's also, it's like if you're working, but it's mostly for if you're networking. So like if a lot of this, like this specific category, it's a stupid thing that people say of like all of the deals happen on the golf course or whatever. Like this is for like, taking people out to lunch, wine and dining them, and trying to get work. So that's like mostly what this category is for. You can the gray area is working meals, and that would be a place that you just need to talk to someone about in terms, because we're not taking just like us feeding ourselves throughout the day on our job. It's specific to like, but that's where it gets into the gray area. Like if I was working on a project with other people and we're eating through working, or just like getting together and working and then taking a break, like that would count. But yeah, there isn't a minimum of like hours that you have to work, but for those that you're in your own city, you're counting real receipts, not the per diem.
Okay, gotcha. That clarifies things a lot. That's very helpful. Thank you.
Yeah.
That the document, the PDF should be in the chat for everyone. If anybody isn't seeing it, can't download it, send me a message, let me know. We got some hands up, so we're gonna go to Arnold next, and then Sandra will have a question after Arnold.
Glenn, I already thought of that P. I thought already. So my question is follow up with expenses. So I'm a person who's get organized with my taxes. So first thing first, I work a couple like student sets and like extras and stuff. So if the meal is not in like unpaid, if you know meal breaks and you have to pay out of pocket, does it cover as a like a business expense? And my second question is found that so I work at Amazon, so for the taxes, they're all about per diem and stuff. So I was on leave, so that worked 1099. Should I do self-employed? Because if I do a 1099 for leave stuff, I know it's not acting related in industry and stuff.
Your question is if you should be W-2 or 1099 at your Amazon job?
Yeah, because I know I'm an actor too. Yeah, because I know I'll be receiving 1099s.
I don't know if I'm understanding the question. So you're an actor too, which means you have 1099 work. And then can you say it again
And
for
the
me?
W-2s are both W-2s 1099. Because
Both W.
I'm not doing the self-employed like 4 times a year. I'm doing like once a year
Right.
tax. So so for my situation, I'm doing like it's called lifetime credit. My friend who's an accountant, he told me that I forgot the name. Correct me if I'm wrong.
Lifetime learning credit, is that what you said?
Yes. Lifetime learning credits. I'll be getting that in my acting career.
Because you're in school?
Oh no, I graduated a year and a half ago. He told me, my accountant told me, my friend of mine. He said you'll be earning lifetime learning credit even you're out of school.
So the lifetime learning credit is related to your school or education. So that's unrelated to the W-2 work you're talking about.
Right. So what will I get now as I graduate? What will I get now for credits?
If you're like just being hired on as an extra, things like that, just being paid as like some random acting things, that will likely be 1099. And then from uh I think I heard that you were doing Amazon work or something like that. That would likely be due
Because they do 1099 for like when you go on leave and stuff. They pay for your leave. Have you go to Hartford if you're in New York State? The Hartford, yeah, it's just 1099.
I'm still not sure if there's a question in there. Do you mind rephrasing the question again?
Sure, no
Does
worries.
anyone else understand the question? I'm not sure if I understand.
Oh no, the thing is there any alternative income since I graduated so I can save me money for taxes even I graduated besides lifetime earning credit? That's my question. Because I know my 1099s and stuff.
Yeah, you would just get that credit if you were still in school. You have to be in school to get that credit.
Okay, so how much money I should save, like, even though I'm out of school?
So we do need to move on to our next question. It sounds like, sorry, that sounds like it's the same question rephrased. You're asking about education credit towards taxes, even though you've graduated. It sounds like if you're not currently in school, that sounds like what they're saying is you're not able to
Yeah.
claim anything as a result of that. So
Okay.
I guess to maybe clarify that, if an actor were to go back to school and take classes like go to like an NYU or a Juilliard or USC, something like that, then there would
Yeah.
yeah, tax credit to be claimed for education purposes. Okay, cool.
Great. Thank you. Great.
Okay. All right. Sandra, I see your hand up. Let's go ahead and take your question. You can
Okay.
go on camera and unmute.
Thank you. Thank you for this. This is super helpful. And like Glenn, I have a million questions. So
Yeah.
I think similarly, I know Arnold brought this up, and I also often am a W-2 employee as well as receiving 1099 income. And I understand that in that case, always I will never be able to take the standard deduction, right? I'm immediately, is that right? There's no
No,
way, no?
you're always able to take the standard deduction as any taxpayer, everyone, because it's you on the person side, you're able to take the standard deduction.
Okay, and if I'm claiming business expenses though, maybe I should have phrased it like that. Then you can't take the standard
Those are
deduction.
two separate. I know it's really confusing.
It's confusing because I'm both often.
Yeah, so a standard deduction, any taxpayer can take. That's just $13,000 or $14,000 that you don't have to pay taxes on. The amount changes every year, and on top of that, you can take business expenses against your profit if you have
On
10.
top of that,
Yeah,
it's not either or. I can elect to do the standard deduction and
It's by
file a
default.
Schedule C or something.
Elect it. It just happens by default because you're a person. So the person gets to take
Okay.
it no matter. And then if you're a business, you also get your business expenses no matter what.
Okay. Wow. That's mind-blowing. Okay, thank you. That's new information for me. Thank you.
Yeah. Did you have other questions?
I did have one quick question if no one else. I had well, is there anything you can highlight, if there is anything that we should know if we are both W-2'd and 1099? That was a great helpful tip. Is there anything else that might be like, hey, this is an exception, if you have both income, you should be aware of X? Broad ask.
You know, it gets a little tricky. A lot of actors these days are getting paid just on W-2. And, you know, that kind of was a shift back in 2017 when the tax changes happened. A lot of W-2 employees were able to take expenses, but then if they were just W-2, suddenly they weren't able to take expenses. And it gets complicated because actors have mixed income, and sometimes they're just paid on a 1099 for like a reimbursement of like a costume rental or something like that. It can get, you know, unique to your situation. You can think of filing your taxes as like a long story you're telling the government about your life and your business. Each year is a different chapter. And if you think about it that way, you kind of are looking at yourself and your business in a long view. So if you are suddenly getting a bunch of W-2s, you never took business expenses before, it's unlikely that you're going to be able to take expenses against that W-2 income. So if you're only W-2, but you feel like you're an actor and you're self-employed, it depends on what else is happening, but sometimes there are times where you might not be able to take those expenses because you're strictly W-2. Then again, if like you have been taking expenses, you've had 1099 income in some years, but maybe this year you didn't, you're still telling that story like, hey, I'm still open. I still have my open sign on for self-employed business. So I'm still able to take those expenses even if I didn't have much or any 1099 income. So just to say, I guess when you have both, the like details of what happened in that year are going to be important for understanding if you will be able to take expenses or not.
Teresa, can I jump in for a second?
Please.
Thank you.
I just had a client who has a W-2 day job, but is also doing non-union voice acting work. And last year, 2023, because of the strike or whatever, she didn't make any money. But the important thing is that it is a business that she is continuing to do and will attempt to do. So therefore, she didn't have income on her freelance side, but we did take expenses against her overall income.
Thank you both. That's great.
Does anybody else have questions at the moment? Yeah, let's make sure we don't miss anybody again. If anybody was, you know, having trouble figuring out how to raise their hand. Sandra, your hand's up again. Is that up from before, or is it another question?
Oh, it's another question.
Okay. And then really quickly for everyone, I'm putting that discount code that was at the end of the slides from the presentation back into the chats, Actors Connect 50. And I'm assuming can actors who attended this event just go to, is it brasstaxes.com? And that's where they'll find all of your services, that's where they can connect with you guys to utilize your services this tax season if they need to, and use that discount code there. Okay, cool. So I put that stuff in the chat. That should be available for everybody. Actors Connect 50 is the code. Check out brasstaxes.com if you would like to connect with our lovely guests from today. Real quick, did anybody else have a question? Sandra, we'll get to yours if nobody else has one. I just want to make sure if anybody was having trouble raising their hand or something, they're good to go. Feel free to unmute and jump in. Going once, going twice.
I'm in the chat. Please tag me. I know some direct messages came through, but hopefully I was able to answer it. If not, let me know.
Okay. Gotcha. Yeah. The chats do only go to hosts and co-hosts. So if you guys have a question, you're having trouble, or you can't go on mic or something, feel free to send it to one of us in the chat. I saw something just pop up in the chat. I'll take a look at that and copy that over to you, ladies. Let's let Sandra go in the meantime. And then yeah, any other questions? We usually end these after about an hour, so it's 4 o'clock. So do we want to say, would you ladies be okay if there ends up being another question or two sticking on for maybe like 10 minutes? We say hard out time of 4:10. Okay, cool. All right, we'll go with that. Sorry. Sandra, all you.
Thank you. Is there a minimum amount of 1099 income that you should earn to do the estimated payments? So like if you're earning, you know, $500 one quarter and then not something else from 1099 income, do I still have to do estimated payments for just that one quarter, or am I supposed to spread it out over the year, or do I not have to do it at all that year?
Yeah, that's an interesting question. If it were me and I made $500 in a quarter, I would not send part of it to your house. But that's just me. You could, send a little bit. They're funny. It's a weird penalty that there is, and it's very specific to like the date of paying. You're only paying for that quarter, so you're not having to think about like, okay, do I spread out, like, am I like 500 for the year is now what they're thinking about. It's just for the quarter. It's important to pay on those exact dates, deadlines. Before or after a few days would be sometimes considered a late payment if you pay too early for the previous quarter. And they'll ding you for that. And if it's a couple days late, they could ding you for that too. You're not going to get in trouble for not paying estimates. It's just it's like what the IRS gets you in trouble by just charging that fee, right? So that's like the worst that's going to happen. A lot of people look at it as like a convenience fee for not having thought about it all year. And then other people don't want to pay any more than they have to. So for me, I wouldn't pay something on a small amount. Is there a minimum? No. And that's why it kind of gets tricky to like think about as a freelancer, because we're like, it's so volatile. Like sometimes we'll get $5,000, the next quarter we'll get 20 bucks. Like it can just be all over the place. So that's another reason why like talking to someone about it, because we kind of look at it when we're helping our clients with it, like the long story of your years. So like what happened last year? What was your income like? Is it going to be similar to this year? You're kind of making guesses and checks along the way. Don't aim for perfection there is what I will end with. It's like, okay, it's not worth trying to get perfect. It's like there's some math to it for sure, but it's not something that you need to like, bog down on and take a lot of time with.
Thank you.
Does that answer your question? Okay. And anything else?
We do have a couple coming in the chat. Oh, sorry.
Yeah, no.
A couple coming in the chat. I will actually just the way our chats are set up, you can only message the host. So I'll take the stuff and I'll copy it in so that everyone can see it. If any actors are like, wait, what did they just say? The question was, it'll be here so you can follow along. I was like, duh, that's easier. Zoom doesn't make it so you can message multiple people. So I'm like, here, Anna, and here, Teresa. And I'm like, all right, put it in the chat to everyone, and then everyone can see it.
Yeah.
Yes. So I was just gonna say this is a question from Kelsey. Can everyone see it in the chat? So Kelsey only has 1099 income. I do Japanese translation as well. Let's talk. So is it reasonable to include these monthly costs? Yes, if you have business expenses directly related to your translation work, anything that helps you. So correct. You don't need W-2 income to write off your freelance expenses. Those are, two separate thoughts. So you can expense these as long as it is directly related to your translation business or your work as a translator.
So I just put another one in the chat. We got one from Tamil. So that should be there so everyone can see it. He said when to go S Corp and how far back can one retroact their W-2/1099s towards that new status?
Oh yeah. Yeah, it comes up a lot. S Corp stuff, I think like in the fad of getting TikTok style finance help has been like, you need to have an S Corp or else you're going to lose a lot of money. And just generally, I would beware of anyone who's using like greed or fear to really threaten you into signing a bunch of papers. Having an S Corp is a commitment. There are annual filing things to be aware of. There's lots of rules, and getting out of it is not as easy as even getting into it, and even that has takes a couple steps. Why people even think about forming S corps? So just to back up a little bit, as default, as a freelancer, you are what is considered a sole proprietor, and that's your tax identity. This is true if you do nothing to like talk to your Secretary of State and say you're in business, or if you go and file a single member LLC, you're still, that LLC identity is a legal entity, not a tax structure. So you're still considered a sole proprietor, even if you have an LLC. What people get advice on is you can take that LLC and have it taxed as an S Corp. And that generally can help you save money on your self-employment taxes because you can write that off as a business expense within the business return. It's complicated though, because for example, New York City doesn't recognize S Corps. So there is some, you basically are getting double taxed both on the business side of things and your personal side of things. There's some like workarounds to kind of make that come out a little bit better, but different locations have different rules about that taxation. But effectively, you could backdate your S Corp to start as late as a year before. You would just need to have had an LLC formed within that year that you're trying to backdate it to. Sort of in the weeds there, and that question can pop open a can of worms, but yeah, if you had any clarifying questions after that, happy to hear and follow up.
Cool. Yeah. So Tamila, if you have anything that you wanted to tag on to that, yeah. Taxes and finances are complicated, huh, everybody? Like it's such a struggle. And like we actors, I think a lot of us are not the most business savvy. So stuff like this is like really, really helpful. I don't know if you guys are coming back again like before the end of tax season, but I feel like we could probably use it if Tony and Colleen talk to you about that. Yeah, I mean we're kind of past the end of our time. We'd have time for maybe one more quick question again, Tamil, if you had anything to follow up on that last question with go for it. Otherwise, yeah, I think we might hit the point of wrapping it up. I have a quick question that I think would be helpful for everyone here. You know, in this age of side hustles, I feel like I got advice like a while back that now I'm feeling like is really bad advice and is wrong, that you can only kind of like pick one thing. Like, so like I said, I'm like an Uber driver, right? Like that's my chosen side work or like survival work, which a lot of people side hustle. I do it full time, right? But actors here might be cater waiters or pick up events and get paid 1099, and that, or also be like dog walkers or whatever, and do all these kind of like different side hustles to bring together all of our income. Then we also are obviously hoping to and hopefully booking actor work that may come in the form of 1099. It's all piecemeal, right? Now, is it you just collect all of that income, like not you, and then with expenses, like expenses that apply to any bit of income that you got, right? Like if you are, say, a dog walker, right? But you also are an Uber driver. And so you're like, well, I have to pay for gas, but I also buy dog treats, right? Those are both written off as expenses, or does it have to only apply to like certain things, certain parts of your income? Can you not claim everything, or you know. And let's throw an acting thing in there too. Say you have to travel for an acting gig, right? You can claim that expense while also claiming what you claim for, you know, dog walking, and then also for, I don't know, babysitting or whatever, right? Like you
Yeah.
can lump everything that's any expense, that's any part of your income in there, right?
So you don't need to have one. You don't have to pick one side hustle and that's the only one you can claim. You can have as many as you want. There are times where, you know, someone's like um, making so little extra from a different side hustle and have so few expenses from that dog walking hustle that like it's all untaxed money. We'll just all capture it under your independent artist stuff. If it's like $20 of expenses and $300 of income, that's not an official threshold at all. I'm just giving an example. If it's small enough where I'm like, okay, this doesn't really need to be reported on a separate Schedule C is the form that you will have your income and your expenses on. That's a term you'll probably hear a lot if you get into talking to someone about your taxes, but you would have a separate Schedule C for acting and separate Schedule C for dog walking because those things are so separate. And you can have as many as those as you want. There could be times where we just put them together because it doesn't make sense to really separate them. They still get viewed as the same thing. So you have these two separate forms, but on the like, you can think of the tax return as like a tree, and you have all these branches that are all these other forms, but everything goes back to the trunk, and the trunk is your 1040, which is like the federal return where it has like all of the totals of where all of those branches went. So you can have two branches that are like dog walking Schedule C, acting Schedule C, but what actually gets totaled is the total of all untaxed money, profit or loss. So it's not going to come out on the trunk of the tree as dog walking and acting. It's going to come out as business income or loss. So capture everything. Where I might separate stuff is like you have an intention of having things separated. Like I'm going after dog walking. It's going to be my like secondary form of income. This is a specific business. It's separate to me versus like I did a couple months to get some extra income. You can still claim it, but it might not need its own separate thing. But if they are separate things, if they are separate business trajectories, like you're going after them equally, you know, as with gusto, then you would want to also separate those expenses and know that your dog treats are on the dog treat business Schedule C and your actor expenses are on the actor Schedule C. And that's where like capturing your expenses and then also knowing what is what and what's for what is going to be important. So it depends.
Okay, gotcha. Yeah, it's all very it's all a bit nebulous and ethereal. It's a little bit of know what the rules are,
Yeah.
figure out some things as you go, right? Like, yeah, okay, cool. But this has been really informative. I think has helped me lay a lot of groundwork, for heading into taxes and whatnot. And I hope that all the other actors who attended today got a lot out of it as well. Really quickly, I think we had some people popping in and out. So I am just going to leave this up for a minute and I'll put the discount info and whatnot back into the chat if anybody wants to check in. That's the discount code to save $50 at brasstaxes.com on their services. And then one last time, I am going to put that document in case it disappeared on anyone, the Freelancer 101 Guide to Taxes. In case anybody didn't get a chance to grab that earlier, it's going to take a second to upload. It literally took 1 second. It should be in there now. So that's exciting. Cool. So yeah, we are past time. Thank you, ladies, so much for sticking around and answering some more
Yeah,
questions,
thanks, Glenn. Thanks,
including
everyone.
mine and indulging me. I hope that was helpful for some
Yeah,
other
no, it's
people.
helpful.
Yeah, I hope that was helpful for other people the way it was helpful for me.
You
But
also like don't know what you don't know. So hearing
yeah,
other questions is enlightening always, even to me.
Absolutely, right? Like there's so many times where I'm in like an event like this and I'm like, I didn't even think of that. Like I'm so glad that person asked that question. So, definitely guys, don't be afraid to ask your questions when you have them. I mean, not anymore today because we done, but next time. But yeah,
Yeah,
so
I'm the same thing. I'm the same thing. Like after people ask questions, I was like, testimony.
yeah,
I
yeah.
was
Like
like,
the more
Totally.
people ask questions, the more we all get to learn a little bit.
Yeah.
Especially yeah, exactly. You don't know what you don't know. It's very true, Teresa. Uh, so don't be afraid to ask those questions, even if they feel dumb. Because sometimes I'm like, do I want to ask that? I don't know. Like I'm gonna look like an idiot, but then someone else will be like, thank you so much for asking that. So yeah. All right. With that, without further ado, I am going to go ahead and end this meeting. I'm going to stop the recording so that it